Hello and welcome to the latest episode of The Exchange. I'm Douglas Jonas, your host. Today I'm joined by Ryan Sullivan. He is the head of ETF Services at BBH Bank. Ryan, thank you for joining us here today.
Great to be here, Doug. Thanks for having me.
As a reminder for everyone, this interview is for informational purposes only. The NYSE does not recommend investments or investment strategies. Now, Ryan, we are like right off the presses with the latest edition of BBH's Global ETF Insight Survey. I was hoping you would tell us a little bit about, why it is that BBH does this survey.
Happy to, because I think most folks will recognize BBH as a global custodian and fund administrator to various types of investment products across the globe. But yet here we are, and kind enough to be hosted by the New York Stock Exchange to talk about our 8th annual Global ETF Investor Survey. But what we find is that while our commercial stake and what we actually provide as a custodian administrator really focuses on the back and middle office, our relationships and touch points are greatly expanded when we can engage directly with the front office as well. So like I said, this is the 8th year we provided this global ETF investor survey. And we find this offers a lot of insights to product development teams, strategy groups, C-suite, as well as their distribution teams, and understanding how end investors, advisors, institutions, and other fund managers are using ETFs, selecting new ETFs to add to their portfolio, and what else they would like to see offered in an ETF wrapper on a global basis.
Yeah, longtime reader, if you will, of really tremendous insight. So we do appreciate that you offer this out to everyone. One of the things that stood out to me, we've talked a lot at the New York Stock Exchange over the last year about active ETFs. Mm-hmm. A lot of information that you kind of pull together with use of active, the growth of active, how many active ETFs have launched this year. Would you mind sharing a little bit at a high level of what some of the things you saw on the survey?
Happy to, and this is oftentimes when we're beginning engaging our clients, especially in the US, the first questions we're getting is what are we seeing in the active ETF space? Each year, I'd say in the survey, the findings we get from the investor community offer some subtle differences and changes and not so subtle differences. And I would put the findings on active ETFs into that latter category. This year, we saw globally 65% of respondents plan to increase their allocations to active ETFs over the next 12 months. So basically over the course of 2021. And that number really ticks up when you look at the US in particular, which came in at about 71% planning to increase their allocations. So what does this mean for our respective clients and firms looking to get into the ETF space? We do think this will be a tailwind for fixed income ETFs in particular, whether it be ultra short, kind of core ag bond exposure, increasingly looking at high yield offerings. But with 2 years of some record-setting inflows into fixed income ETFs in the US, we do think the demand for active strategies will lend itself nicely to support additional asset flow and growth of fixed income ETFs in particular. But we wouldn't be able to offer kind of an ETF update here without talking in a little bit closer to home in the US with the arrival of the semi-transparent active ETF offerings. We're about a year from the first launches that occurred in March of 2020. And this year, when we asked our survey respondents about demand for these new types of ETF structures, 51% of US respondents said they plan to buy these in the next 6 months. So I think there's a lot of promising tailwinds here for active ETFs in particular. This is showing up now with our clients directly in terms of their product development initiatives. When we look at the pipeline of new ETFs that we'll see come to market here on the BBH platform, about that ratio active to passive is skewing 3-to-1 in favor of new active ETF offerings.
Yeah, we talk a lot at the New York Stock Exchange about this growth of active, and in particular the new space, semi-transparent, active, non-transparent, whatever we want to call it. But we always throw around the term innovation when we talk. Mm-hmm. Are so innovative and really making changes in the market. But if I stay on that term for a moment, because a lot of your survey gets into innovation, are there other areas of the market that you found innovation when you were doing your research?
Yeah, and this idea of sort of innovation occurring in the ETF market is one of the biggest signals to BBH that the rotation of assets to the ETF wrapper, that the growth we've seen almost accelerating over the last 5 years, which is crazy when you think about we're 30 years into the ETF market at large. That growth is almost accelerating, and I think that the idea of innovation and what continues to be new strategies and emerging asset classes that are increasingly deployed in the ETF wrapper is a sign that we're only going to see future growth and continue to see sort of the acceleration we've seen. In particular, this year in the survey findings, we did touch on the growth of defined outcome ETFs, which sort of had a banner year in terms of visibility in 2019 and 2020. They actually rated third in terms of areas where our investors want to see additional choice and new product development. So I think a promising feature for the group of managers that are in that space, and one we'll expect to see kind of continue to evolve as managers bring new innovative strategies to that particular area of the segment. And you know, the big headline last year was the growth of thematic ETFs, and I think the innovation is continuing to be seen and come to fruition within that segment of the ETF market as well. 80% of our survey respondents plan to increase allocations to thematics. Kind of, you know, suggests that they may have more of a robust toehold in portfolio allocations than we had previously thought. And it'll be interesting to see how we see these advisors and institutional investors maybe allocate and change their allocations, but retain, you know, some kind of exposure to certain themes. In particular, internet, robotics, and artificial intelligence were all rated pretty highly, but also increasingly an area to watch would be digital assets. You know, here in the US, we're in sort of a murky regulatory environment when it comes to when will we see crypto ETFs approved, for example. But I think these are strategies that could see rapid adoption if they're offered in more of a thematic based approach, especially if we don't see any kind of physical digital asset offering approved here in the near future.
Yeah, it's just fascinating to think that, you know, here 2020 was this pandemic year, you know, so many awful things, so much volatility, and that yet ETFs walked away with this sort of banner year, breaking records across the world. I wanted to, you know, kind of bring up one more theme with you, which is, I could tell you my team, the word sustainability, the phrase ESG, I mean, boy, these are words coming out of our mouths daily anymore. We're launching more and more ESG related ETFs that have even broken records themselves in terms of assets. I'm curious, did any surprises in your results around, you know, broadly ESGs?
You know, again, we think about these year-on-year trends we've tried to outline and highlight each year when we release the survey. And ESG is certainly something, as you mentioned, it's you know, almost secondhand commentary these days. But there's also been interest in the products for a number of years, especially when we look at our business in Europe. So this is something we've focused on for a number of years. And I think every year there's always stated interest in buying ESG. It's very few people are going to say, no, we're not doing this. But that interest, you know, it's always been kind of debatable, is that going to show up in flows? And I think last year we had a promising story there. You know, ESG flows, I think globally were right around about 90 billion, which was close to a high watermark, if not a high watermark for kind of the ESG category on a global basis. So it does seem like increasingly we are seeing investors kind of put their money where their mouth is a little bit when it comes to the stated demand, and now backing that up with increasing allocations and flows to these products. And again, I mentioned the pipeline we see at BBH in terms of active and passive a few minutes ago. We also see this on the ESG side. So I think when you're combining these themes of an actively managed ESG portfolio, where there might be opportunities for the ETF managers to distinguish and differentiate, we do think it will be in the ESG space a bit more here as we kind of go through the rest of the year. But there's an evolving policy landscape here as well, which needs to be considered by managers in the space. This will certainly, you know, I think for managers looking at a global platform, understanding those different policies and regulations in the markets they operate in, how that may influence ESG usage. But I think there's no shortage of sort of macro stories and policymaking stories that folks will need to be weaving into their ESG story to investors.
Well, Ryan, thank you for taking the time today. I got to tell you, for those that are watching, you want to read this survey. You can find it either going to BBH's website. You can go to the home of ETFs.com. We have it loaded there. You can find not only the full results of the survey, but many other educational episodes, all brought to you by the New York Stock Exchange. Again, thank you for sharing your time and insights with us here today. That's a wrap on the latest episode of The Exchange, brought to you by the NYSE, the home of ETFs.